Hello everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Monday to you and your family. We're going to take another look at Bitcoin. Obviously, big surprise. It's red here today. Kind of expected that throughout the weekend just based on the way that it was getting rejected at that specific level, 28,000. Retested the 26.5 mark and potentially going to break below. So what we're looking for here is confirmation below that trend line, kind of see where we're at. I'll explain more about that in a moment. We'll also take a look, of course, at High Block Capital, kind of see what's going on the back end here as well, and obviously just help you understand best practice and big picture. And to my community members, I'm confident we're going to be able to hit our target there at 26.4 for our short for Bitcoin. So hold strong, patience is key. We came really close already today, and I think this is just the beginning of Bitcoin correcting itself a little bit further. Okay. So again, if you're new to the channel, keep in mind, not a financial advisor. Do love teaching people to trade. Just a quick heads up, we do have our indicator live, of course, after the last few days. I'm very, very impressed with the amount of members trying this out. Very well done. We actually got an update coming here soon, just so you understand, those who purchased it. We have an update coming today, as a matter of fact, that will provide us with more entry signals. Okay, so it's really going to just help kind of elevate the opportunities there for you so you can have the choice to get in where you want and obviously get out when it's overextended. So again, that's kind of where we're at there. Great stuff. Be sure to check that out. And again, you want to become a better trader, cryptocash.tech is a site. I've got a trading academy, community, and signal group. We're all learning, growing together. Very awesome experience. There's also a one-week trial on our signals, which we're rolling out with day trades here in the next couple of weeks if all goes according to plan. Okay, so we're just in the final stages, kind of getting that ironed out. So be sure to check that out and stay tuned. I'll let you know, obviously, when that happens. Just heads up. Okay, so when it comes to High Block Capital or just the back end stuff, liquidation levels, what we're going to do is take a quick look here at just kind of the heat map. This is a 7-day heat map here for Bitcoin, kind of just showing and reaffirming the fact that 25,300 is still at support level. We got a tremendous amount of liquidation potential there. What this is too, by the way, this isn't liquidations that have occurred specifically. Obviously, that's part of it. But the other part of it is liquidations that could occur. This is where people are opening a lot of positions to essentially get filled or to have a stop loss, right? So we can see a hard stop here at 29,000, second hardest at 28,400, and then of course third largest, if you exclude the 22,500 mark, is 25,300. That is a Fibonacci retracement level, basically this key level here where the price action rejected out multiple times, and that's reaffirming itself as a support. So keep in mind that is a very strong level. Same thing here as well. We can see a lot more longs getting liquidated than shorts. Open interest is significantly larger at the 27,800 mark, as well as the 27,000 or 26.9. Okay, so this really does imply here that the price action being kind of right in this level, this range, it's a good chance that we have a lot of shorts hedged right there, expecting the price action to come lower. Okay, so keep in mind, a lot of shorts are opening up right now. We can see the amount of asks also is equivalent to yesterday. While open interest is increasing and the asks are staying the same, that implies that more shorts are in the positions and that there's more potential for longs to get liquidated. Okay, again, stranger things can happen, but that's just kind of what the back end is telling us here. That being said, we got rejected off of 70 in the RSI for the most part. The money flow index is coming down. We've got a MACD divergence significantly forming here. Now keep in mind there's potential for this to bounce, but the likelihood is less. Okay, again, it makes more sense for us to get a divergence now at this point, considering we've been overextended for this long. Cannot break through this resistance level at 28,000, 28,400, and it makes more sense for the price to at least retest 25.3. Okay, so I would expect the price for most coins to decrease here in the near future based on that sentiment. Take a quick look at what is it, Bitcoin dominance. We can kind of see here that it is kind of plateauing here, which implies that with the price action of Bitcoin coming down, Bitcoin dominance staying the same, a lot of alts are getting hit very hard. Look at this, sea of red, okay? So very big surprise? Not really. It makes perfect sense that a lot of alts are getting hit right now. Okay, so am I saying to open a bunch of shorts? Not really, because I never truly like to recommend that, but I can tell you I'm leaning more towards shorting at this point. Almost opened a short last night from ETH. Unfortunately, slept through it. That's kind of how things go sometimes. You can't watch the market all the time, but it makes a lot of sense right now to consider some shorts based on the fact that this level at 27,000 is having some difficulty. It's gotten retested 3 times in the last couple of weeks, or last week rather. Okay, so that's kind of where we're at there. Daily looks not so great. Keep in mind, simple moving averages, we got the 20-day SMA working its way up to that 25.3 mark. So once again, reaffirming that level. So we'll bridge that gap later. We'll see how that works. But for the most part, with us making lower highs and lower lows in the 4-hour, this implies it's going to continue until it doesn't. Okay, so keep in mind this last time that it wicked all the way down to reset here, that was a situation where we had, that Fed meeting, right? That was a really interesting time frame. That allowed us to reiterate that and reaffirm that support here. But the fact of the matter is it recovered quickly because it was a lot of fear, uncertainty, and doubt that dissipated. And if we see here, we're making lower lows and lower highs. Leading into that, we were making higher highs and higher lows. So that inverse applies here. The fact we have momentum to the downside implies that the price were to come back up, it'll probably get rejected off 27,700 and come back down, or the most recent low, which is essentially 27,200. So I'd say if I were to short 27.2 would be an ideal opportunity to go to the downside there, because there's more likelihood the price is going to come down than up. Again, this is just what the charts are telling us. It doesn't necessarily mean that you have to go hard in either direction. But it might be important or ideal to hedge some of your longs with some short positions based on the simple fact that it's giving us a lot of indications that we are moving down. Once again, could be a false positive, but once more, it's just, you got to kind of read the charts. We are having a significant divergence on the MACD on the 4-hour. We're now under 30 on the RSI. Money flow index is coming down. A lot of reasons why we're probably going to continue further. We're also below two key moving averages as well. While the 200 is averaging itself up at the 24,300 mark, that doesn't matter too much right now. The important thing is that we have a free range here between 26.8, or just say 27,000 even, and 25.3. Okay, so I will not be surprised if we get filled from our recent Bitcoin trade we took roughly a week ago, and then it continues lower and hits most, if not all, of our targets. Again, that's kind of just what it's looking like. This is just what the charts tell you. Do I have a crystal ball? No, no one really truly does know. And sometimes you'll get lucky too, but for the most part, statistically speaking here, we have a stronger likelihood to come down than up. Let's take a quick look at TD sequential and we can kind of see here. We were kind of range bound right up there between 27.7 and 28. Lost that pretty hard, came down, whipped all the way down to a 6. We got a little reset here. So hypothetically, the price could go sideways or down. It could even go sideways and up. But more importantly, at this point, it would make more sense for the price to kind of try to go sideways to retest its most recent low. Right here, again, 27.2, and then get rejected off of it. Okay, it's a common characteristic for the most recent low to be a new high. And we could very well see that happen. It's already kind of averaging out at 27,150. So, to me, I think it's more likely we're going to see further downside here. If we take a look at the cloud, even though we have been range bound for some time, it looks like we've dropped below that range. We're retesting the range lows, and that really tells us a lot about the price continuing further down. We're below all moving averages, free and clear price action. There's no reason not to short at this point based on, again, what the charts are telling us. Okay, so there's no guarantees on any of this, right? So please do not take a short right now thinking it's just going to drop like a rock and getting mad at me perhaps if it were to turn itself around. The bottom line is that you have to take ownership of your own trades, and the important thing is to use risk tolerance. No matter what people are telling you to do or to say, you make that decision at the end of the day, okay? And I like to say that just because obviously this market is tumultuous. Even though I have a very high success rate, there's been a few trades that haven't gone the way that we want it to. And that's okay. You got to learn from that. You got to grow and become a better trader. That's the whole point. That's the whole concept. So again, rewatch my videos, specifically the risk tolerance videos there if you're currently a community member through our website, of course. If you're not, consider the education package and kind of get as much learning as you can in. You can learn a lot from these videos, but I dive deep into a lot of that stuff, and I think that's important. And just make sure that you are just being the best trader you can, minimizing your loss. So at this point here, even though we're consolidating nicely at this 26.8, 27.2 range, I feel like further downside would make sense. Again, traditional markets are not fantastic today. S&P's up a minor amount, NASDAQ is down a little bit. It's kind of a draw dead, and dollar index isn't really doing too much either. So in truth, we don't have a lot of stark realities that are like, hey, it's going to keep going down because of X, Y, and Z. While there are some fundamentals we cannot see, a lot of the back-end stuff with liquidation data is telling us that we have a strong resistance at 28,000 and a support range at 25.3. So the price could literally waver anywhere in between that. And right now, with us retesting this 27,000 mark, the likelihood of further downside makes a tremendous amount of sense to me. Okay, that's just my speculation here. Do with it what you will. I hope you learned something here today, of course. If you did, comment below, like, subscribe, the whole 9 yards. Thanks again so much for watching. Hope you have a fantastic rest of your day. We'll see you in the next one.